Joining me now to discuss is Bernstein Research's Stacy Rasgon. Stacy, thank you so much for joining us. You know, in your notes, you've noted that Qualcomm's had a history of actually putting up some pretty good quarters, but then not being rewarded for it. What's going on here?
Yeah, you know, I referred to it at one point a quarter or two ago as the Rodney Dangerfield of semiconductor stocks, and I hope the audience knows who that is.
I get it.
It really has been. They get no respect, and you're right. This is, I think, the ninth quarter in a row that they've actually guided above. I don't really think that expectations are terribly high. I get the complaints, right? You know, they have a fairly sizable Apple business, which is going away, and it optically limits EPS growth because I understand all of that. But it's entirely known, 100% understood. And I think there's some really good stuff going on under the surface. Like the adjacency story is very real. The auto and industrial markets are businesses for them are growing a ton. Ex-Apple, they're growing double digits. They laid that out pretty clearly. There's even a data center story there now, and they're going to have an event probably in the first half of next year where they'll give us some more color on like what the shape of that looks like. But they suggested it was probably a multi-billion-dollar opportunity that I think is zero in the numbers and zero in the multiple. It may be a bit of a waiting game still. I still think we're waiting for Apple to kind of roll off so you can kind of see everything that's going on. That's probably more 27, but we're getting to the point where we're almost there. And in the meantime, they're executing about as well as I've ever seen them execute. I like it. I like it.
You do. You like it here. I mean, it is interesting to me that you're talking about the Apple roll-off entirely understood, but also noting that it's a pretty big business, while at the same time saying the Samsung flagship share is also falling this cycle. You know, I don't sort of square that for me. Square that circle.
You bet. So Apple first. Hey, look, it's big. Apple does, you know, they're out of $8 billion, give or take, of chip revenues. It's probably, you know, $250 in earnings, and that rolls off in stages over the next several years. And again, the company's been 100% transparent on what that looks like, and it's understood. Samsung, you know, their market share, they have the flagships, the high-end stuff at Samsung. Over the years, their share's gone up. They went from 40% to 75%, and they've been at 100% share the last couple of years, which is probably unsustainable. They've got a long-term agreement with them, and they've talked about 75% share is probably a baseline. And I think with this cycle, we knew that Samsung was going to start like reusing their own chips. We knew that share was going to come down. I think there was some investor worry that it would actually be a lot lower than 75. It doesn't look like it is. It's 75%, which again is their baseline. I think it's fine. I think it's fine.
Okay. All right. Before we let you go, why do you think fears over margins are unfounded?
Oh, so there was a competitor of theirs that reported before they did, and their gross margins came down quite a bit. And so there was worry about like competition. And you can look at Qualcomm's gross margins. They don't report a chip gross margin, but you can back it out pretty easily. It's fine. They have a range, 48 to 50%. It's right in the middle of that range. It's fine. There's no evidence of significant competition-driven margin compression. Like, that's all.
Oh, okay. That sort of reminds me of one of my favorite shirts I have. It says, "It's fine. I'm fine. Everything's fine."
I thought it was fine. I thought it was more than fine. I thought it was good.
Okay.
You know, no respect though. It is what it is.
Stacy, thank you for joining us to talk about Qualcomm.
Yeah, you bet.